Hi, welcome. I'm Jessie Walters from Charles Rutenberg. I'm here today with Nightberry, the group. Cheryl Alvarez Henry's here. She's a branch manager over here at Nightberry. And also joining us is Cheri Hippenbecker. Did I destroy your last name, or am I good?
My church students' kids always called me Mrs. Hippie, so you're welcome to say that.
Okay, Mrs. Hippie, you like that better. So
that and we own a peace van, a VW bus, so we are the ultimate hippies.
Oh,
just
nice.
So you know.
Oh, wow. So I'm a hippie too. So she's joining us from Wisconsin. Is that right?
Yes.
Milwaukee, Wisconsin. Wow. And the weather?
Milwaukee.
How's the weather? Tell us the weather, because it's like 80 here. You're like, I don't want to. She already hates me. I'm just kidding. You're like, no, I'm not telling you the weather. So today we're going to discuss with Nightberry the 1031 exchanges. But I also want to, they're our sponsor, and I also want to thank them for being our sponsor, being great sponsors in the area, Nightberry. And also we have the sponsor from, whoop, where did it just go? We have Michael and his sponsor information. Banner, Professional Mortgage Alliance. He's also our sponsor for this show too. So we have Michael Banner and Nightberry for this segment that's brought to you by Nightberry Enterprises. So we're going to discuss the 1031 exchange. And so she's going to basically, you're going to educate us today, right, Cheri? And
apparently, the exciting world of 1031 exchanges and taxes. That's exactly what you talk about.
And it's tax.
By the way, this morning I listened to your session from last week about reverse mortgages and learned an absolute ton from the gentleman that presented.
Awesome.
So
that's
thank you so much. Hopefully this is as informative.
Right. Yeah. And that was Michael Banner, and he was promoting those. And even though I cut tongue tied on his name, he's going to be like, say my name 20 times, So, yeah. So, but anyway, so tell us about, it's tax time right now. We're going to talk about 1031 exchanges and how they save you the actual tax money, and what what that tool can do for you as far as tax time, or not even tax time, just, you're buying and selling properties. So tell us about why you think they're great, and, the procedure to do it.
Sure. 1031s are great if you're selling real property and you want to buy other real property, you want to get up. Let's say you just entered. I know a number of people that are in the residential real estate market where they're investors, and they, start out with buying a duplex, and then eventually they want to okay, well, I have a couple duplexes. I want to sell those duplexes. And when I go into an 8-family, or I want to go into a commercial property, and they want to sell their duplexes to be able to up to that commercial property. And the question comes, do they have to pay capital gains taxes at the time that they sell the duplexes? And the answer is they don't. They can sell it later when they sell that commercial property, if you follow the steps that are set forth in the Internal Revenue Code, the IRS Code 1031, Chapter 26 of the Internal Revenue
So that's how it gets
Code.
The name on the
Very exciting.
1031.
And 1031 is the actual section of the IRS Code that involves the type of transferring of wealth from the rental property that are your duplex to your commercial property that we'll talk about.
Right. Okay. Now I know you had examples of a gentleman purchasing a property when I was going through, like we were talking about the different slides and stuff like that. And so you were saying like he's, so for instance, a normal, for me, a 1031 exchange, if I had a rental in the area and I wasn't real happy with the area and I wanted to get, say, a better area, that 1031 exchange, so I'm selling this property, and instead of just selling it and getting that capital gain, which is what normally, you do. You have that rental property, and you have to pay the capital gains depending on where you are. I'm not an accountant or a tax person or attorney, but depending on where you are with that income is where you're going to get taxed on that capital gain. So this is going to save you from that capital gain by taking that property and not touching that money. So I think that's like a good point on the 1031 exchange too, because I think people think, well, I'm going to get that money and I'm going to get this 1031 exchange and then I'm going to go ahead and purchase this other property. But you are doing that, but you're never touching that cash, right? And then
that's exactly right. Yeah. There are steps that if you don't follow these steps, the IRS is going to ding you and you're going to have to pay that tax, because the tax man wants their tax. And this is a way to delay the tax man from coming, but you have to follow the rules. Specifically, if you don't follow the rules, sorry, you may have to pay that tax in the year that you didn't want to. Right. By the way, it was a good time to talk about that. I am neither an accountant. You're not an accountant. And neither is Cheryl Herney, who's with us as well, who's on our local office down in Florida, and I'm in Milwaukee. And I am an attorney, but I'm not your attorney. So please know that what we're going to talk about is general steps that need to be taken pursuant to the IRS code. But as to every specific transaction, it's unique. What are your unique tax consequences? I don't know where a person's where they are in the tax structure. Are they making $1 million, so they're at the highest level, or are they lower down? I don't know how long they've held that initial investment property. I don't know how much money they're making in the initial investment property. Sometimes it makes sense to pay the capital gains, to sell the property, pay the capital gains, and then reinvest in that commercial property. And then sometimes you look at it and says, no, it really comes down to that specific person, that specific property. So please, 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 when you're considering this, please engage your own attorney or accountant to be able to make that
or Nightberry
comparison for you.
Yeah, Nightberry is the one who's going to handle it for us. Like in our situation here in Florida, I mean, I would just call Cheryl and say, I want to do a 1031 exchange. If it was me personally, or if it was one of my clients, I would refer it to you guys, as far as handling it for me. So that would be key for me to deal with somebody who, obviously I know you guys aren't attorneys or accountants or lawyers, but then in reality for me, you're the person who's going to handle it. Like I'm going to give, we're going to do it together basically. But if you mess up like one thing, like she's saying, then you don't get that tax break. So, and it's also, isn't it? So you're definitely like, if you have to be $1 over the next sale too. Like, so for instance, so if I sell this property, how does that work? Do on the next property, it has to be a higher, right? By at least $1. Is that right?
Why don't we jump into it? I mean,
Okay.
First, thank you for thinking about Nightberry to be your
Yeah,
qualified intermediator, accommodator,
You guys are my
the people that are going to
sponsors.
hold the money when you sell the first property and you buy that next property. We're
Yeah.
what's called a qualified intermediary. That's the terminology in the IRS code. By the way, when we talk about 1031s, some people also call them starter exchanges or like-kind exchanges. They're all the same concept. And let's dive into an example and then what the steps that a person has to do that's doing a 1031 so they don't take possession of the property. That's the cash on the sale of the first property.
Right.
So here we go. Here's our example. Bob is buying a duplex in Tampa, Tampa Heights. That's what Cheryl Horney said. Tampa Heights is kind of where you would start out buying a duplex. Let's say he bought it for a steal in 2010 for $65,000. And now it's 2021. He's depreciated the property a little bit over 11 years. It's depreciated down to $45,000 depreciation on his individual tax return. And Bob wants to sell the duplex in 2021 for $175,000. Seems pretty good. Well, guess what? He has some capital gains, right, ladies? This is the exciting part.
Yep.
Bob has capital gains because he bought it for $65,000. He's selling it for $175,000. That's $110,000 of capital gains. It's not his personal residence. So yes, he has to pay capital gains tax. And as to where he is in the bracket, it kind of depends on what his income rate is,
Right.
0, 15%, or 20%. And of course, capital gains taxes, the rates always change depending upon the administration that's in Washington, D.C. So I suspect those rates will be played around with in this next administration. In any event, Bob has capital gains from the $110,000. He also, hey, guess what? For the last 11 years, he's depreciated down from 65 to 45. He's taken some deduction-sized tax returns of $20,000, and the government says, I want that money back too.
Yeah.
So Bob has to pay a 25% depreciation tax, recapture tax on that $20,000, which is $5,000. Okay, so Bob's like, I'm selling this for $175, and great, I'm putting a bunch of money in my pocket, but now I have to pay tax. Oh, wait a second. There's also a Medicare tax on a net investment income, potentially under this current administration of $4,180. So we're talking about a ton of money. Ladies, let's do the quick math. We're talking about $26,000 or so that Bob has to pay in taxes on the sale of this initial investment property. And he wants to move up to South Tampa. And he says, well, I want to buy a new property in South Tampa. I'm selling this one in Tampa Heights. Can I take that $175,000 from the sale, not pay any taxes on it now, and plunk it right into the new property in South Tampa? What's the answer to that question, Cheryl and Jessie?
Yes.
I'm your
Yay!
I'm your
The answer
realtor.
is yes.
Yay, we got it. Just kidding. Yeah, I'm your realtor, and you guys are the title company. So, Bob, bring it on.
Okay, let's go back to the slide deck if you don't mind, ladies. We'll walk through this.
Okay.
So first of all, the reason the government says, yes, Bob, yay, we want you to be able to swap that land, sell that property that's in, is it Tampa Heights and then South Tampa? Is that it, Cheryl?
Correct.
Yeah. Sounds
Okay.
right.
From
Over
one
here,
jump
yeah.
to
The
another.
government
Nice.
wants you to be able to do that. And why? Because the government has a public policy that says we want people to continue to invest in real property in the United States and not just cash out of the first sale and never get back into the real property game. I mean, you could certainly have a cash out and go into stocks. We want to encourage movement in real property. So the public policy says, yes, I want you to be able to go up from a smaller individual duplex to this grandiose, lovely commercial complex. So yes, the government says, yes, you can do that. And you don't have to pay any of the gain that we just talked about, the capital gain, the depreciation recapture, or the Medicare tax, if you follow the steps that we're going to talk about in a few moments here. What are those steps? You kind of alluded to them earlier, Jessie. The first is had to be U.S. real property to U.S. real property. So I can't sell a property in the United States in South Tampa and then go to Canada and say, hey, Canada's a great place to invest.
Right.
Because the U.S. government is concerned about reinvesting back in the United States. So it has to be U.S. real property, U.S. real property.
Right.
By the way, ladies, did you know it used to not just be real property?
No.
Yeah, you know what? A long time ago, but I've never done a 1030 myself personally, but I've seen that it was businesses, right? The one I seen was like asset or business assets or something.
Yeah, well, I was involved in a couple of them. Airplanes used to be a big 1031 exchange. So let's say somebody started out with a small Cessna or something for $100,000 and said, what the heck, I need to be able to go up to, I don't know, some sort of jet. So they wanted to sell that Cessna for $100,000 and reinvest into a $500,000 lovely jet, which probably is not, I know nothing about airplanes clearly, because I suspect $500,000 isn't enough.
Yeah. Yeah,
And they
like,
said,
this has nothing to do with
I don't want to pay capital gains taxes on the Cessna for whatever reason. They could reinvest into that next airplane. And people, that used to be available. And you used to be able to do this we did this with livestock a lot. People owned,
Livestock.
some cows. They were literally sold cows and decided to go into sheep. So they would actually, you have a capital gain when you sell your cows.
Wow.
But instead, the government would allow you to transfer it into the purchase of the sheep without having to pay capital gains. That apparently became extraordinarily complicated.
Yeah,
so
I was going to say, you could cheat, be like, yeah, I mean, I don't cheat on my taxes, obviously, but there's a lot of loopholes I can see. Yeah, we did have more cows than that. They don't, you know what I mean?
Well,
like
we had them for dinner.
Yeah, it was worth more. We didn't, yeah, it seems like when you, I don't know. Well, there's loopholes in everything, but I think when assets get involved, I guess if it's something like a plane, like you said, then it's a currency. They're used to, they can get the valuation, but like cows and
they run away.
Mortality and you know what I mean. I start going off on
start crossing the road
I'm like,
and they get hit.
Yeah, cows to sheep, the equalization of like which asset's worth more. But I guess there's market value and all that. Makes sense. But like you were saying, they don't.
It makes sense. And I love the fact that you went on that tangent. Thank you for going out on that tangent. At the beginning of the Trump administration, though, so that was in 2017 or so, it got locked down where it used to be cows and sheep could be transferred in a 1031 stock exchange or like kind exchange. And the government said, okay, stop the madness. It's just U.S. real property to U.S. real property. That's one of the critical steps, number one.
Now, Cheri, it can't be, I can't go sell my property and go buy a Cessna.
That is correct.
Yeah.
No longer, you cannot, unless apparently I was going to make a joke, but my joke wasn't going to work because since the Cessna leaves it'd be interesting, like, could you buy a houseboat?
Yeah.
Which,
or if the Cessna was made into, that's probably what she was just thinking. If the Cessna was made into, like all the wheels were took off and it was made into real property, like a mobile home,
Look
like
at
they
that.
make the real property.
Look at that.
If I can make it real property, you can do it.
We're getting creative with
put
the
it on a piece of
1031.
land, pay the impact fee, make it part of the property, then we can use it. Yeah. Turn it into
or another podcast right there. We could definitely delve further into what constitutes real property. I don't know.
Yeah, we could go on for like probably 2 hours and a big argument over, I'm sure there's been attorneys like to do that. But I mean, in Florida, what we're talking about obviously is from property to like a property with more value, like
Sorry, everybody.
That's okay.
All right.
So we knew when we were saying that too, it is a property that is more value, right? Like it has to be more, when I was asking that before, even if it's $1 more, is that right? If you're designating the next property that you're selling, Bob's selling his old one, and then of course that one, he's going to go up in value is where we're at, right?
I'm not certain if that's necessarily the case. That's something that in a particular transaction, first of all, you probably want to have something that's worth more when you purchase it So you can
Yeah,
take
that
full
makes sense.
advantage of the
Yeah.
deferral of gain. Because this is all you're doing, by the way, is you're deferring the payment of taxes until you sell the next property.
Right.
Although if you pass away, there may be some other tax consequences that come in for your heirs. There may be a step up in basis, what called currently, whether that exists when you pass away, that I don't know.
Right.
But I don't think there's a legal requirement that the next property that you reinvest into is worth more money.
Oh, okay.
But it's something that you would encourage, especially Jessie, when you're working with somebody who says, I'm interested in this,
Yeah.
you say, great, we have a team of people that can help out, be the qualified intermediary, which we'll talk about after this break, I think.
Yeah.
But then as to the actual tax consequences, how it's going to look on the individual's tax return for that, we just got to go, let's get your accountant involved. And he or she can certainly give you some advice on how much you can anticipate paying in taxes if you just pay them, or how much you would save if you deferred using a 1031 like kind of exchange.
Right. Yeah. Because it just depends on, are they still at work? Are they making, $100,000 a year? Are they in the next tax bracket, 200? And I forget all the cutoffs, but depending on, what they're going to get taxed on. So this could, seriously though, this could save them a lot of money if they do defer the taxes, like we're saying. So that's what's interesting to me because, well, in Florida right now, there's it's such a hot market for resale. So it's very easy to
Find something.
It's very, very easy to sell top dollar now. So it's just a little harder to find
Well,
and
that's
designate
true
it.
too. You can sell top dollar,
Yeah.
but go look finding something out there. That's,
Right. So you're trying to find something comparable. So most likely when you're selling it, you're going to, like, Cheri was saying, it's going to be more money. It's going to be a higher, especially right now.
To use it all.
Yeah. Yeah. So that would be a easier, easier transition because you are going to be going up but again, the taxes, and like it's tax time, like we were saying, it's tax time right now. So it's a good time
That's
to call
true.
the accountant and say, what if, because you're getting your taxes done right now. So you can kind of see where you're at in comparison to to actually doing a 1031 exchange. So that's
That's exactly right. And I think a lot of people are surprised by that 25% depreciation recapture. That could hit you hard. You've depreciated down in our example, $20,000. So you have to pay $5,000 in depreciation recapture tax.
Yeah.
That's a lot. That's
a lot on
above
20.
and beyond the capital
Yeah,
gains tax. And let's say you've depreciated it fully down. That's a 25% on a full depreciation down. So certainly before somebody goes and starts, listing the property to sale and they're thinking about this, speak with your accountant and the tax consequences, because there's going to have language that you're going to want to have in your listing contract and your offer to purchase with the buyer that says, hey, by the way, I'm doing a 1031 exchange, like kind of exchange. There's a couple of different pieces of paper that have to be signed at the closing. Buyer, will you work with me to do that? And the buyer, I don't see why the buyer would say no, but you certainly want the buyer committed to say yes.
Right, exactly. Okay, so what we're going to do is we're going to take a little break. For us, it's going to be a couple minutes, but for you guys, it'll just be a couple seconds. But come back, we're going to learn more about 1031 exchanges and basically how to go through and go forward with one and how we'll help and answer all those questions. So stay tuned. Hi, welcome back. I'm Jessie Walters with Charles Rutenberg. I'm here with Nate Berry, and we're learning about 1031 exchanges. I have Cheryl Alvarez Henry with me, and I also have Cheri Hippie. Just kidding. Cheryl Hippenbecker, which I always said I'm going to ruin, from Nate Berry. And we're learning about 1031 exchanges, and we're getting some great information. This may help you save money, so sit tight and listen with me and learn with me. We're going to hear Cheri's on Zoom call. And she's located in actually in Milwaukee, Wisconsin. So she's on, and we're on the second part of the 1031 exchanges. So tell us more about basically how and what step we're at with the 1031 exchanges. Tell us more.
Okay.
We need to know.
So here we go. You've decided you want to save some money. You want to defer your payment of capital gains, depreciation recapture, and the Medicare tax that comes into play here. And you're like, okay, well, I'm going to sell real property in the United States. I'm going to buy real property. Great. I want to sell it today, take the money, and then go and buy the real property, the next real property I don't know, in the next 6 months or something like that. Cheryl, is that okay? Can the person sell it and then just decide, maybe I'll take the cash, and when I find a new property to purchase, that's just fine?
Not if they've already started this exchange process.
You're not supposed to touch the money.
They cannot. So that is right. Bob, who's our example, who also happens to be my husband, is just the easiest way to use that palindrome.
I have a customer.
Bob.
I have a customer named Bob, so he's probably thinking we're talking about him right now too. Kathy and Bob, they're probably like watching this, going, "She's using us as an example."
So the government was basically like, Bob, we like you, but we don't trust you. You cannot take possession of that cash from the sale of the first property right before you buy the next property. You must have somebody who's in the middle, and I'm sorry, that keeps coming in. I don't know how
That's
to
okay.
take my phone off, apparently. You must have somebody in the middle that's called a qualified intermediary. That's the fun term in the Internal Revenue Code that grabs that cash. So if Bob sells that first property, there has to be somebody who's qualified that grabs the cash. It can't be somebody who's related. There has to be documents. It has to be clear that that qualified intermediary holds the money and Bob doesn't have control over that money. And that's it. And Bob, if you touch that money, boom, you're out. You are disqualified from doing a 1031. Why? Because the tax code is pretty much strictly construed. If you don't follow the tax code perfectly along its steps, then you violate that tax code and you don't get to take advantage of the deferment of the capital gains tax
So no
payment
making
in the
it, no
tax
making
man
it rain, Bob. You
That's
need to
number
keep
one.
that money in the
Engage a
account.
qualified intermediary. Guess what? Hey, Cheryl Herney, does Nightberry serve as a qualified intermediary for a 1031 exchange?
Absolutely.
Absolutely. We do it for a fee. It's a couple $100. We're going to be the ones that prepare the paperwork.
That's
We'll hold
awesome.
on to that money, and then we're going to go with the next step. The next step is Bob sold that property, that South Tampa property, the Tampa Heights duplex. And within 45 days after the sale of the Tampa Heights duplex, and that's called the relinquished property under the statute, then Bob has to identify to the qualified intermediary that what properties he wants to purchase, what replacement property he wants to purchase.
So in layman's term, Bob needs to go shopping, find that property to purchase, and then he needs to, they call it identify, but just because some of the people that watch are going to be like, what does identify a property mean? You know what I mean? So to layman's terms, Bob's going to sell that, the one property, and before he obviously called his accountant to make sure this 1031, is the thing for him. He's going to identify or go under contract or seek out this other property. And that money that Bob just sold the other house for is now in escrow with Barry Knight. They're holding the money, and it's cost him a couple $100 instead of all the thousands in taxes. So just in case, I have some newbie realtors who watch this, so just so they're like, okay, I got it now. Catching them up. So, yeah.
So let's talk about the 45 days and what Bob has to do to identify the replacement property.
Okay.
First, Bob doesn't have to go under contract for the replacement property.
Okay.
He just has to identify, I'm interested in parcel 1, 2, and 3.
Okay.
And then in writing within 45 days, and it's actual calendar days, including holidays and Saturdays and Sundays. So you just look at the calendar. Day 1 is, let's say, January 1, the day Bob sells the Tampa Heights property. Then 45 days later, so what would that be? February 14th,
14th. Yeah.
which happens to be the day that this is being shown, right?
Yeah.
Happy Valentine's Day, everybody. Bob has to, in writing, tell the qualified intermediary, which is Nightberry Exchange, who's going to serve as a qualified intermediary, I'm interested in these properties, parcels 1, 2, and 3. And he has to adequately identify it so that, me coming in fresh, looking at the document, I go, okay, I understand what property Bob wants to buy. It's parcels 1, 2, and 3 in Jesse's subdivision in Tampa, in South Tampa, Florida. That'd be great. That's enough. It has to be in writing. Has to be the qualified intermediary within those 45 days. And Bob can generally identify up to 3 properties. You can't say, I want to buy parcels 1 through 75, and you can generally identify 3 properties. But hey, let's say Bob says on January 31st of the year, Bob says, okay, I identified 3 properties. And then when he goes to purchase those properties or get them under contract, all of them have already been under contract. Because does that happen a lot in your area? At least in my area, things are being sold like that these days.
Yeah. And
so
just
Bob
so
actually
low.
can change his mind. So let's say January 31st, Bob says, here's the 3 properties I want to identify, sends it to Nightberry Title as the exchange company, and then, realizes February 5th that those are already under contract with other buyers. And he goes, okay, here's 3 other properties I want to be able to purchase. Bob can do that. Again, just needs to make sure certain the identification of those 3 new properties
Okay.
is provided to the qualified intermediary within the 45 days.
Right.
It has to be like, hey, I revoked the other stuff because can't buy those ones. And
Yeah.
here's the new properties I want to purchase.
Okay.
And it's generally 3 properties, by the way. There are some goofy little rules that allow you to go up to 200% or some other thing. But as a standard rule, 3 particular properties that Bob wants to buy. Jesse, when you were involved in any of these, do you remember that phase of it or any
Yeah.
thoughts on that?
I'm thinking, so I don't know if the timelines are still the same. So he has 45 days, but to close on the property, that was my next thing. I was going to confirm the timeline. Is it 6 months or 180 days to close on the property after identifying it, or no?
That's exactly right.
Okay.
So 45 days, that's your first step, Bob. You got to make sure you
Thanks.
identify properly. Woohoo!
Oh, look, we're together. It looks like
Okay.
it's a whole separate, sorry.
Sorry.
So Bob identified his 3 properties, whether they're under contract or not.
Yeah.
He has, after he's identified and he did it properly within the 45 days, now it's 180 days from when the property was sold. So again, example to make it nice and easy, January 1st, 2021, property is sold. Bob has 6 months from that date to be able to buy the real property using the 1031 exchange funds that are parked essentially with Knight Berry title.
Right.
But let's be cognizant that in what's in front of you on the screen, it says Bob must purchase the replacement property, the South Tampa property, the earlier of 180 days after he sells, or when Bob's federal income tax return is due.
Oh,
So,
either or. Oh, okay, got you.
Okay.
so if you have a situation where your 180 days is going to be beyond when your tax return is due, you got to work with your accountant, if you're the exchanger, the person that does the exchange is called the exchanger, to ask the government to allow you to, extend out when your tax return is
Oh,
due.
okay,
Okay.
gotcha. That's good to know.
That's good. It's good to know.
So keeping the accountant informed the whole time, really, 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 really important.
Yeah. Yeah, definitely.
So that's your timeline.
Okay.
And by the way, Bob has to purchase the property, not some random third party. Bob, whoever sells the property, that has to be the same person as the buyer of the property.
Okay. So,
No name changes.
yeah, so
Like
the
so-
title,
Okay.
the title is the same. So if it's, I don't know. I mean, I was going to say like Home Value LLC, then Home Value LLC has to be on the next one, or Bob,
That's
is that right?
generally, there are some nuances if Bob is a sole member and
Yeah,
the government doesn't think of Home Value LLC as a separate company because it has its own, it uses Bob's social security number. There are some nuances in that,
Yeah.
but generally speaking, if Bob sells, Bob has to purchase.
Can't
Okay.
give
And it
it
makes it
to-
nice and easy.
Tell
Okay.
his son to start investing.
Yeah.
Correct?
Yeah, I can't switch
Yes.
it over to his son or anything like that. Right, exactly. It's just Bob and then, yeah, Bob again. Okay, got it.
After Bob purchases the property in his name, if he wants to do something Yahoo with it and change it into an LLC or corporation, whatever he wants to do, work with his accountant, that's certainly fine. It's just for purposes of the exchange, Bob to Bob makes it
Has
the
to close
easiest.
it that way.
Right.
Okay.
Bob to Bob.
Bob to Bob.
Bob to Bob.
Okay, I like it.
My husband's going to love it when he watches this and I keep referring to Bob to Bob.
Yeah, he's gonna be like, I was the focal point of this whole show. You'd be nothing without me. I was, yeah. That's awesome. Yeah. So now we're on. Okay. So now we've got the exchange. We identified it, like, as you said. You had 45 days to identify it. So when do you think? Would you suggest like the best time to go under contract after from there, like from this point?
Well, so you've identified 3 properties. You're at day 45. You properly identified on day 45.
Yeah.
Day 46,
Mhm.
you get under contract as soon as you can. There's no pause on getting under contract, by the way.
Oh, okay.
Because let's say you are not under contract on day 45 on the 3 properties. And
Right.
day 46, you go under contract,
Mhm.
and they're already committed to somebody else. You've lost out on your opportunity
For
to
your-
be able to
do your
complete the exchange. Because you
Right.
cannot, after day 45, change your mind as to the 3 properties that you properly identified.
So I don't know if you know this question, but being a realtor, I always think of this. So say we're doing this, and I got Bob, and he's got his money with you guys, or he's about to sell his property, and he's about to get all that money come in, but he sees a property, and he wants to do the transition before the 45 days. Can Bob take his own money prior to the proceeds and put a deposit on it to hold it, and then for your escrow, or does it have to be 100% sole money from that? Do you know that?
So it depends on how he's doing his 1031 with his accountant, but there isn't an objection. We've had many situations where we do same day sale of the relinquished property, purchase of the replacement property.
Right.
That's
right.
certainly fine. As far as the earnest money
Yeah,
or
that's
down
what
payment, however you call it in your local area,
Yeah.
there may be some nuance on how that gets treated. But typically, if, as you kind of indicated, you are going up. You are selling for one price and then
Yeah,
you're
so there's
buying at a
money to
higher
be-
price.
yeah,
So
there's
you're
money
going to
to
have
put
to
down anyway.
bring some money to the
Right,
table
right.
anyway on
Okay,
the
got it.
replacement property.
Okay.
So that earnest money usually isn't
Yeah,
a
sure.
bar to completing the 1031 exchange.
Okay.
Okay, got you. Yeah, because I was just like, if all that money, you know what I mean, you have to, I didn't know if there
You
was
have
an
to
order.
use it all,
so,
and if you
yeah.
go over 5,000,
Then you got your
you
deposit
still have
there
that other
anyway.
4,000. Yeah.
Right. Okay,
So,
got
yeah,
you.
makes sense.
Yeah. So, and then too, if you're a realtor and you're listening to this right now, again, you want to put this on the MLS that this is going to be involved in a 1031 exchange. So you have people who are either going to ask questions about, why you want to close in 45 days, or you could kind of stretch that out.
Deadlines and-
for me, I'm thinking I need that time because of the house sales are so fast these days. So I'm thinking I need that full 45 days to make sure I can get your property. So
Didn't think about
and
that.
the timeline too. And then again, the contingency, you may want to ask the people you're purchasing it from. There's a home sale or not a, investment contingency 1031 exchange on the other side too. If you want to cover your buyers, so that God forbid your first one falls apart, you don't lose the deposit, and that they're open to waiting for another buyer, which we have no problem with buyers these days here. But, just as a new realtor, you might not know that you need to protect Bob. Your husband will like that one. We need to protect Bob, make sure he doesn't get ripped off.
So Cheri, let me ask
Oh,
you
from
this.
so many things. So many things I need to protect Bob, so don't worry about that.
So on this note, as Jessie just said, so the first contract passes, or not the first contract, as lenders are always getting delayed. Now we're past those 45 days. What happens, Cheri, if we didn't close within those time frame?
So if you cannot purchase for whatever reason within the 180 days, sorry, you may not be able to do the exchange. The IRS, man, not a lot of sympathy or empathy by the IRS, man. You have to understand these are very specific, tight time frames. I mean, they're not tight necessarily, but you have to meet those time frames. Otherwise, you simply haven't met all of the elements and the steps that are required.
I
So
guess
you'd be able
180
to
days, that's
do the
6
exchange,
months.
which means that you have to pay the capital gains.
That should be
That's
enough
all.
time.
I mean, a lot of these people, if he has that much equity in there, he's a cash buyer. Most, a lot of them at that price, if they've owned the property, they have that much equity. A lot of them,
they're going on term, yeah.
Or the loan's really small if they're, putting all that much money down into it. So usually they can close them in like 30 to 45 days because it's not normally most investors are using conventional loans. They're not trying to get
if
FHA.
It's a probate, then it gets delayed.
Yeah. We know that one. Yeah.
But Cheryl, your point is really well made.
Yeah.
Don't wait. Don't
Yeah.
wait the 180 days. I mean, a lot of people will wait until the 45th day because they're still trying to figure out what property works best and getting under contract and all that. And again, you can change your mind up to the 45th day. That's great on the 3 properties that you're going to identify. By the way, you don't have to buy all 3 properties. Let's say you identify 3, but you only buy 1, and that eats up all of the 1031 exchange money. That's just fine.
Right. Yeah. So
but don't wait the 180 days. I mean, don't schedule your closing and go, hey, I'm good for the 180 days. Probably kind of risky.
Yeah, that's right. Yeah. And some people will do that, but please don't call me. Yeah, please don't call me on 183 days, right? And say, I want my tax. Well, you can still buy the property. You just have to pay taxes on your money that you sold the property for, and you can purchase the other one, but you're not going to get a deferred tax. You're not going to save any money. You're just going to do it.
Do you just release the money after that point, after the 180 days, and they didn't close?
Perfect. Thank you for asking that question because I would have been remiss in not talking about that aspect. So the government says that, Bob, you can't hold that money during the 180 days. You got to have a qualified intermediary, Nightberry Exchange to hold that money. And we get this question asked a lot. Let's say Bob identifies 3 properties timely within the 45 days. And then for some reason on day 50 or so says, I can't buy all 3 properties. They've gone under some other contract. Nightberry, give me my money back. I've deposited with you $200,000. Give me that money. I want to use it now. Can we do that?
I don't know. I asked you.
I mean, it's his money. It's not, I would get something signed that says I no longer want to go forward with the 1031
release of
exchange.
some
But
sort?
I would release. I mean, it's his money,
I'm shaking my head because I would love to give Bob his money back. Great, Bob, here you go. The IRS says no.
You know what?
The
We have
IRS
to
says
give a
once you're
portion.
committed to go into the 1031 exchange, you're committed through the time period,
months?
through the
Oh, okay.
180 days,
But I mean,
or
you gotta
earlier
give
when
us-
your federal tax return is
Okay.
due.
so if he waits 6 months on the 185th day and says, I never found any properties, I want my money back, he gets his money back then, right?
Absolutely.
Okay, good.
Or if he files his tax return for the year in which he sold the relinquished property, then we
Right.
can give his money back if it's earlier than that.
Yeah, because I don't
But-
want Bob to come try to kill me.
Can't change his mind within
Yeah,
6
200,000.
months.
Yeah. Yeah.
He's tied.
So
Okay.
Bob, and by the way, we get asked question all the time. People want their money. It's my money. Just like you said, the gut reaction is, yeah, you should be able to have
Yeah.
control of your money. But the IRS says, no, you wanted to be able to take advantage of this deferment of capital gains.
Right.
Therefore, you're in it for the long haul, guys. The qualified intermediary has to hold on to that money.
Yeah, you
I
gotta.
hate that answer, but it's the answer from the IRS code.
Yeah, I mean, Bob's got to understand. We're trying to save him money here, you know. So yeah. So now, as we were talking about that too. So let's just say. My other question would be, which I think you covered it, but just to make clear to people, if you're purchasing and he has all that money and he's got, the money coming in, and let's just say he wants to buy, he's found another bargain for $50,000 and he wants to buy $50,000, can you go down and then just get the balance
The
of the money
difference back?
taxed? Can you go upside down or no?
Certainly. I mean, that's a little bit more complicated, but Bob should work with his accountant
Right.
to be able to decide what works best for him. So
Okay.
that's why Bob should always identify more than one property. Bob says, I know I'm buying this one property. You might as well identify at least 3 so you have the opportunity to be able to use up all that money. What I said kind of before was, if you want to defer, try to defer all the gain, try to go up,
Right.
try to use,
Yeah, that makes
again,
sense.
buy multiple
Yeah.
properties so that you take a full advantage of why you're entering into the 1031.
Right, because I mean, as a realtor, you'd go, well, buy the $50,000 one, but then you have all this other money can be tax deferred too. So we might, like you said, identify 2 more properties to come up to the whole total amount. So that's so interesting. So what we're going to do is we're going to take another break. We are, but you guys are going to hang tight. And I want to thank Nightberry, our sponsor today, Cheri and Cheri. Joining us. You like how I did that little accent there, the little Cheri? And then, but anyway, so thank you so much for Nightberry Title Group for joining us today. Stay tuned, and we're going to come back and talk more about 1031 exchanges and how everyone can do them. Hi, welcome back. I'm Jessie Walters with Charles Rutenberg. I'm here today with Nightberry Title Group. We have Cheryl Alvarez Henry. She's the manager. And we have Cheri Hippenbecker. She's a general counsel, and she's counseling us today for sure on 1031 exchanges. She's like educating us. I thought I knew a little, but apparently I did not know enough. Yeah, yeah, exactly. Yeah, so we've learned a lot. So we were on, she's again showing some slideshows, and we were talking about Bob and his purchase. So Cheri, she's on a Zoom call. She's joining us from Wisconsin. So are you there? There you are. Okay, so does the real property qualify for 1031 exchanges? That's kind of where we were just dropping off and stuff. So tell us more.
Yep, so we're getting into it. So
Okay.
can I just exchange any real property? We already talked about this, that it has to be U.S. real property to U.S.
Yeah.
real property. But when you say U.S. real property, can it just be anything? Can it be like my second home that I've had my cabin up north? By the way, in Wisconsin, I know you all think that I'm up north right now in Milwaukee, Wisconsin, but we have a further up north that's like another 5 hours right next to Canada that we go to. We call that up north in Wisconsin. Can I take my cabin up north and just exchange that, defer the capital gains, and invest into another property? Can I sell my house and can I invest it into another property and defer the capital gains under 1031? The answer is no. There are specific rules that the IRS, shocking, the IRS has rules, and the rules are in front of you right now. It has to be, number one, real property. We already talked about that.
Right.
It has to be real property held for investment or productive use in your trade or business and not held primarily for sale.
So
The
if you-
like-kind rules do not apply to personal properties we talked about.
Right.
Real property.
Okay.
It
So,
has
but
to,
if that
do not apply to real
property-
property held primarily for sale. In other words, if you're a developer and that's what you do,
Mm-hmm.
is you sell property all the time like that, you may not be able to qualify for a 1031. Talk to your accountant about that.
Right.
And it's not any personal or tangible property. Again, it's real property used for personal purposes, such as your home, does not qualify. My cabin up north that I've never rented before, and now I just want to sell,
Yeah, you should
or
rent
maybe
that
it's something
Yeah.
that I purchased and I improved it and I want to sell it, but I've never rented it until now, probably doesn't qualify as real property that can be used for a 1031 exchange.
Right.
Sorry, you had a question, Jessie.
Oh, no, that's it. I was just going to say, quick, you need to rent that property up north out so you can reestablish it as a rental property, and then you can get the 1031 exchange. That's all I was going to say.
That's exactly right. So, and sometimes think about that going forward. Let's say you bought that property up north as a cabin, you've used it as a primary residence or like a secondary home forever, never rented it out. Now you're thinking of selling it because I'm moving from Wisconsin down to Florida because apparently it's much nicer. By the way, you did ask me what the temperature was before. Negative 11
knock
with the
this
wind
for you,
chill
Cheri.
right
Oh my
now. So it's a
gosh,
little
that's so
chilly.
terrible. I'm so sorry. I'm like, it's like 80. You're probably like, I hate them. Oh.
Sometimes our Florida offices call me and they're like, yeah, it's 50 here today. I'm so sad.
I know.
And there was one time my furnace was out last year and this person said it's 50. And I said, it's not even 50 in our house and we can't get somebody to fix our furnace right now. So sympathy, not a ton of sympathy for you guys.
Sympathy exchanges. We had to make that, yeah. Yeah, but we in the summertime, you guys are, we're
Nice and cool.
Yeah, we're like
and
100.
melting.
We're running from our cars, melting,
The makeup's just
So
running.
let's talk about your vacation home. So let's say you want to change that vacation home from just a vacation home for you, but in something that would be an investment property that could potentially qualify now for a 1031 exchange, because you see the writing on the wall that if you sell this thing, it's going to cost a ton of money.
Right.
Well, there is a way to do it. We have in front of you on the screen, this is a very exciting stuff, ladies.
Yeah.
Revenue Procedure 2008-16 from the Internal Revenue Service that said there are certain standards when they call it a dwelling unit can qualify as an investment property in the productive use and trade or business so that you can do a 1031 exchange. And here, I just threw the language directly from the Rev Proc.
24
It
months.
says,
okay.
number one, the dwelling unit is owned by the taxpayer for at least 24 months immediately before the exchange. In other words, you got to own it for 2 years.
Yeah, that's good to know.
Okay.
Yeah.
Okay.
Yeah.
And within the qualifying period, in each of the two 12-month periods immediately preceding the exchange, I love this language, by the way, within each of the two 12-month periods. So in other words, the last 2 years, you must have done this. In addition to own it, you must, number one, rent the dwelling unit to another person or persons at fair rental for
Right.
14 days or more. Okay, great. Find somebody that you can rent it out for a couple weeks.
Mhm.
And number two, the period of the taxpayer's personal use of the dwelling unit does not exceed the greater of 14 days or 10% of the number of days during the 12-month period that the dwelling unit is rented at fair value.
Gotcha. That's good to know. Yeah.
So
and I
does
don't-
your particular vacation home or cabin up north and by the UP, which is the Upper Peninsula of Michigan, does it qualify? Well, it depends on your particular usage, how much revenue you pulled in. You want to talk to your accountant. You want to make sure on your tax return for the last 2 years you've shown revenue as rental so that you can say, IRS, not only did I actually rent it out, I actually paid taxes on that rental income over the last 2
Okay.
years.
Right. Okay, that makes sense. Yeah, and in the state of Florida, if you live in your home for 2 years, so someone might be confused just if they're selling their personal residence. If you live in your home for 2 years here, you have that money's tax free as far as if you homesteaded it. You know what I mean? If it was your primary residence, so the 1031 exchange, it wouldn't work for your primary residence, but you don't have to worry about that in Florida. At least we don't have. It's all that
Right.
money's
Exempt.
non-taxable. So if you up to I think what is it 250,000 each person.
Single.
Yeah,
Yeah.
each person.
Yeah.
So, yeah, so you're.
That's a different section of the IRS code, section
yeah.
121.
Oh, nice.
Woohoo, that's exciting. It is up to $500,000.
that,
Your
yeah.
personal residence
Nice.
throughout the United States.
Oh, okay.
You don't have to pay capital gains if you
So
meet
you
those
don't need this
qualifications. So those are
1031 exchange
different
for that.
qualifications because it's a different statute.
Right.
Uh,
But I'm just telling people who are watching this thinking like, oh no, I couldn't do this for my, they might be confused. So I'm just saying, you guys don't worry about it if it's your primary residence. This is just for basically what we're
Investments
talking
type
about right
stuff.
now, vacation. So tell us what more we can use it for. So we're on vacation, we're on investments, rentals, because I cut you off. You tell me.
That's exactly it. I mean, so
Oh.
you did a great job explaining that you don't have to worry about your personal residence. There's an exemption for capital gains on a different statute. This is
Right.
the exemption for investment property. And really, the IRS wants to make certain that you are, in fact, investing in real property, that it's not just taking advantage. I had a guy the other day that had the cabin up north that he had bought the cabin, he had improved the cabin with some sweat equity and was selling it. And he was trying to insist to me that it was investment property. And I said, well, I don't think it qualifies. You didn't rent it the last couple of years, but talk to your accountant about this. And he said, well, I think the IRS's definition of investment property is different than mine. To which my response was, yes, it is. And guess who wins? The IRS tax man
That's
wins.
funny.
Oh, yeah.
So-
The IRS
Just
chumps
pay.
on this one.
Yeah. Like I always say, well, people are like, that's one fight you're going to lose.
Yeah.
You know, you can fight a bunch of, different, but IRS,
Yeah.
just pay it and
No.
move on, But I mean, this is good because they've literally made this for investors to give you a break, but you're going to fill this out, these forms out, and you're going to do it. You're going to take that money in the escrow. You're going to do all this stuff exactly to the timeline, or it's not going to work for you either. So it's not like they said, oh yeah, if you want to sell that property, go ahead and invest that. It's like, this is how you do it. And, and if you don't do it correctly, like you said, 180 days, if you're 190 days in, then we have some bad news for you, But yeah, it's interesting. So tell me, can you do it? I was asking you on the break. So can you sell a rental property and then put it into land? Can you sell a rental property and put it commercial property? I mean, how does that work with 1031 exchanges?
That's a great question. And the answer is yes, because we looked over here on this IRS publication 544 that I referenced over here.
Mm-hmm.
The IRS publication that says what is qualifying real property doesn't say vacant land to vacant land or commercial land to commercial land. It
Right.
says real property, so long as it's held for investment or productive use in your trade or business and not primarily for sale. If you meet those requirements, that's where the IRS says, okay, we feel pretty good about it. So yes, we certainly see people go from a commercial property to blank vacant land that they are going to develop for some reason, and that can qualify working with their their accountant and the exchanger. But you came into a good point. There are a couple. What we've been talking about was easy exchanges,
Right.
straightforward exchanges, a built property that's smaller investment to a larger investment to be able to take that cash and move it into the bigger property to be able to continue growing our economy. That's the whole
Right.
concept. There's a good public policy behind this, by the way. We want people to grow our economy and invest in bigger and better things.
Right, makes sense.
It's called a forward exchange that we're talking about, or a forward like-kind exchange, or a forward 1031. But then sometimes there's nuanced exchanges. They're a lot more difficult, and where it's going to be more expensive than the couple $100 I said to you before. I think maybe we charge somewhere around $700 some odd dollars. And I don't know. I'm not the accountant at Knight Berry. I'm the attorney, so I'm not exactly certain what our costs are right now. But you kind of look around. It's going to be $750 to $1,500 for a straightforward exchange. What we talked about.
Right.
But sometimes there's more difficult exchanges. For example, what you're talking about going from commercial property to vacant land.
Right.
So that's called a build to suit. It's going to cost a lot more money to do it because the exchanger has to be, the qualified intermediary has to be involved quite a bit more. We've seen situations where it's big commercial projects. So let's say a company owns a building, they're selling it for $5 million, and they want to buy some vacant land and build their brand new, beautiful complex. And it's going to be about $10 million in for all in, but let's say it's $2 million to buy the land. And they say, I want to use all of that $5 million to be able to invest into that new property. The answer is they can still do that, but they have to be involved in what's called a build to suit exchange, where the qualified intermediary takes the cash and actually enters into the contract with the builder to build that brand new, beautiful building on that $2 million vacant parcel of land. Right. If you're going to be doing something like that, we need to be involved a lot sooner and probably have some different exchangers, qualified intermediaries that can be involved.
Right.
Or let's say you're selling the property and you're selling it under a land contract or an installment sale where you don't get all the money up front. You're going to get, as a seller selling your relinquished property, money over time. That's a little bit more difficult. It's going to cost you a little bit more. Going to have a lot more documents to be involved in.
So Cheri, would Knight Berry, the exchange, be the one dispersing the funds as it goes?
The qualified intermediary will. Now, Knight Berry Title Exchange, we've chosen not to get involved in these highly nuanced, difficult, complex transactions.
Okay.
We are there to help, and we have a third party that we engage that does that as their primary business. So our primary business is, hey, we're the folks that insure the titles and we handle the closings. Our primary business is not being a 1031 exchange intermediary. So we pull somebody else in as a qualified intermediary to help out.
Right. So
Okay.
totally kind of on the subject, off the subject. So while we're talking about this, because I know in Florida, we have a lot of investors and a lot of flippers. Is there a timeline on ownership for these? Because I know this isn't usually an option for a flipper, right? Or we call
Probably not, because remember we had the definition of what is real property, and it has to be real property not held primarily for sale, not just buy and flip. Probably not, but it's something that a flipper should certainly talk to their accountant with, because there may be something depending upon that particular transaction, that particular party, and the number that they do each year that it might qualify.
Yeah.
So
okay. Yeah, if they hold
I could go back to the
rented.
very second slide I had that said, not your accountant, not your attorney. You got to talk to your accountant or attorney. But good question.
Yeah. You're like, come on, be my attorney. Tell me this. Yeah. So that was my question too. On the new construction, that was my next one. So it was like, and then two on the 100% reinvestment. So that's pretty much on the, I had read, because I wanted to not just walk in it, because I've done them like a long time ago, but I want to make sure I was kind of up on it. So with the flips, like you said, if you had someone who maybe rented it out for a year and then talked to their accountant, like you said, and then possibly did it, because you can't just, a lot of people are just flipping within like because they'll own the house while they're fixing it up. So it'll take them like 3 months and then they'll sell it.
Keep doing
so
it.
those aren't obviously you're not going to get a tax break on something like that. But this 1031 exchange is really interesting because you can, defer that money eventually. Like, you said the IRS is going to want their money and you're going to have to pay the money on it. But
Eventually.
if you're just staying in the same line of work as far as investing it, you can save a bunch of money by deferring that tax. So that's obviously super interesting. So, so on the, we were talking about the, so there's if you're an international purchaser, can you do a 1031 exchange, or do you know on that
That's a
too?
good question.
Like, do
It's a
you?
great question. Are you an international purchaser that's filing income taxes in the United States?
No, let's say no.
So
that's too
I'm not
easy, 'cause
certain
then they
then
have-
that
then
is
you're
what,
gonna have
I'm
your
not certain if
identification
if
number.
it's a
It's
great
too
question.
easy.
I
Then
don't
you
know the
can't
answer to that
1031.
question.
I should have asked you the
It
question.
seems to
I
me
should've
that that's
emailed
a
you that
true
ahead of time.
accounting question. But now on that point though, international people, when they sell real property in the United States,
You gotta
they
hold
do
it.
have to pay capital gains.
Yeah,
Yes.
That's why we have this whole FERPTA thing. You've heard of this
That's
before.
right.
We want to make sure that the international seller pays their capital gains tax. Can they defer? Maybe.
Yeah.
Let's have them go to their accountant and
Yeah.
have the answer to that
Yeah,
question.
that's probably because I know, like, when I have, the international clients who are selling stuff, I'm like, do you have a social security number? Do you have a federal identification number? Okay, that's not my
But it's not
lane.
even that simple.
Yeah, I know.
It's not even that simple.
Like on some stuff, like you said, you have to give advice where you're qualified. And that's one of the things I want to say. I know a lot, but I don't know a lot about, how to advise someone on that. So tell me if there's anything that you think is pertinent, because I know we're winding down in time, like that you think is pertinent information that people need to know, anything that we missed.
I'm going to blow your mind. Here's the last thing.
Okay.
At the bottom of the screen, it says reverse exchanges. I told you before, we've talked about really simple forward to 1031 exchanges,
Right?
where you sell the relinquished property and within 180 days, you buy the replacement property.
Right?
What if you wanted to buy the replacement property first and then sell the relinquished property second? So you want to buy even before you have the money from the sale. Can you do that?
How?
Yeah.
You can.
can.
It's called a reverse exchange.
Yeah.
Those are highly nuanced. They are going to cost you more than a couple $100 to be able to do it. Nightberry can help by getting a different qualified intermediary
Okay.
to be able to assist. But there is a way to do that.
Oh, that's interesting.
And we saw that a ton and we may see this again at the time where it's difficult to be able to go under contract and they want to make sure that I've got my replacement property
Yeah.
before I go under contract to sell my relinquished property. So that's called a reverse exchange, not a straightforward exchange.
Yeah, and I think too, like if you have a lot of cash buyers, I think that's probably more of an option, because they just, but you can get the mortgage and probably identify and stuff too. But I think like it's easier, like when I have investors, if they have cash, it's so much easier to, as far as like, I haven't done a reverse, but like looking at that and using it as a tool, I can see like, they have millions in the bank. They can just go, okay, well, we're going to do that and then we're going to work it back.
Work it backwards?
Yeah. So then I would think that would be a tool for them,
And the key is before they buy that replacement property, the property that they want to own long-term, they actually have to have the qualified intermediary involved on those documents
Right.
before the sale of the relinquished property. So nuanced, possible to do it, but just know there's a lot of flexibility out there, and there's a way to be able to, provided you're coming back into the United States and you're making our economy grow, going bigger, better, faster, there's a way to do it. We want to encourage that type of investment. The other thing I'd be remiss to say is not talk a little bit about night fairy title. So why on earth am I here in Wisconsin? That's a great question. I'm not certain the answer to that question, but it's because I apparently live here with Bob and our children and whatnot like that. Night fairy title is a title and settlement company that originated out of the Midwest. We've been around here. We have records going back 160 years. I've been with the company over 14 years. And we have offices in Wisconsin, all around the state, Minnesota, Michigan. And in the last couple of years, we thought, hey, it's nice and warm in Florida. Let's go on down to Florida. We started with one office in the Panhandle. We're up to 11 offices, and let's say counting, because we want to keep growing and expanding. We love your state, and I'm really glad for this opportunity.
Yeah, it's great to for you to have you guys on, and for you, for your sponsorship too. I really appreciate all that you're doing for me as well. And we have a lot of viewers out there who are just purchasing and selling stuff even on their own or need information, and they can reach out to you guys on title questions, title policies, buying, selling, anything like that. They can actually reach out to you guys, and we're going to put your contact information up. And I want to thank you for joining us today. It was great talking with you. And if anyone has any questions, it doesn't have to be about 1031 exchanges. It can be about just normal buying and selling. We're here to help. And like I said, I'm going to put the contact information. If you need a realtor, I'm here to help. And thank you guys so much for joining me today. And everybody have a happy Valentine's Day, and we'll talk to you guys soon. Thank you.